Value.
Welcome to Momentum Monday, Howard. Today's August 4th.
It's not Momentum Monday, it's Devalue Monday or
Exactly.
Revalue.
The trade war is on. The Chinese official just declared that China should stop buying agriculture goods from the US.
Oh, that
And
just happened?
yeah, it just happened. And then the Chinese yuan is at 10-year lows.
So are they going to try? Hang on, I'm just looking for the news. Do you see? Let me just read. Hang on, let me just go to Bloomberg quickly, everybody. So let's pull up a chart of the futures. China lets one tumble past 7 as trade war escalates. Okay. And you got Hong Kong. It's going to be an interesting week.
Yeah, absolutely. Let me share my screen and sure. Okay. Can you see my? So these are the futures.
Yeah, I can see it.
It's down about 1%. And
It's a pretty big move for a Sunday night, actually.
yeah, I mean after three days, 3 down days in a row, we have a gap down on Monday. So definitely we're reaching kind of oversold levels, and we might be close to a snap point, but then
No, there's some fundamental
we'll
stuff
see.
going on. Let's take a look at Bitcoin tonight. I've been long Bitcoin, and I feel like people are being too lazy. Everybody's talking about gold, and for all intents and purposes, other than that spike last year, I mean, Bitcoin's at all-time highs. There is very few people that own Bitcoin. And everybody's talking about gold. And so I feel like we're going to see a major spike. Don't chase it here. I've been talking about it since 5,000, but I'm glad I have a position on because we could wake up and see that at any price. I wasn't expecting to talk about Bitcoin, Evan, but I feel like this trade war is escalating.
Well,
And
for many people, it's the only way to protect.
people are rushing into gold. Let's take a look at gold chart. I just don't get it. Why people feel the need.
All right, here let's take a look at the longer term gold chart.
That's a good breakout. I mean, it is.
Even monthly, yeah.
Yeah, that's a good breakout. So kind of looks like just a squeezed together Bitcoin chart, to be honest. If you overlap the last year, you condense time, like Bitcoin's condensing time of gold. But man, the last year in Bitcoin, 2 years, looks a lot like the last 6 years in. Can you pull those up side by side?
Like the last 20, 20 years of.
You know what I mean? Like, isn't that interesting? If you
Yeah,
looked
yeah,
at,
yeah. But I cannot compare them on this one, and
can't compare them. I'm gonna have to pull
but
up.
but they do like very much alike, just on a different time scale.
Well, same with Amazon, Bitcoin, because Bitcoin's part Amazon's part software. Like Farbood was telling me tonight. I was talking to him just about an hour ago from CoinMine, and he's likening it to physics, like physics for a digital world. That's what crypto is, and so, and the closest thing in software to this in internet speak is Amazon. And the closest thing in the physical world is gold. It's kind of like a little bit of both. If you can think about that movie Zero Player One, where everybody's living in a virtual world, Bitcoins are going to be. Anyways, I think there's some overplaying of hands. But let's get to the S&P, Ivan. What do you see?
So here's the S&P 500. Three big distribution days last week. It tested its 50-day. It kind of held last week, but then tonight it's down another 1%. So tomorrow will open,
In no man's
lower.
land.
So I wouldn't be surprised if it tests its
And we got a
200
flat
day.
200 day there. Is that a 200 day right there?
Yeah, near 280.
Yeah, so it's kind of flat. Nothing. I don't know. We're in no man's land. This is an interesting,
Yeah.
good time to sell up. I think for the last 2 weeks I've been talking, these have been August, September for the last 20, 30 years have been the weak months. It's easy in hindsight to look back at this and say, the Russell didn't break out, it was lagging, as you can see here. If we look at the banks, false breakout in the banks, bam,
The same in semis. I mean, they reach all-time highs, and then it's been.
I mean, the China stuff does not help. Like this, they are not the place. They went from, it's been volatile for sure. But yeah, that's another false breakout in the semis. There's China. Whew.
Yeah, China is having so many issues. It's just the Hong Kong protests, and now the trade war with the U.S. There's so many things going on there. So
yeah, yeah. It's above my pay grade, so I think you just have to be careful. If I look at other areas of market that we were talking about retail. So this last tariff just destroyed some retailers.
Yeah, absolutely. Even Amazon and Nike were hit. And Apple, of course.
They're hit because they are consumer brands. So Apple and Nike were the ones that were hit the hardest that I know in terms of market cap. The Apple, it looked like the market had gotten over, and maybe Cook overplayed his hand there by saying China kind of unit sales were improving. We knew that Nike was already worried because they had kind of pre-announced by signing the petition that they were going to get crushed by these tariffs. And so sure enough, with this last tariff, the stock got hammered. If we look at a long-term trend on Nike and Apple, it's like we're in no man's land. These are still long-term upward trends. What are you going to do? If you hate the market, protect your gains. But as a trend follower, I'm not selling stuff that I've held for years based on a week's worth of data. But I think what we're seeing tonight in China is just escalation in the trade war. And none of us know how that's going to play out. And we know that China can last longer than anybody at this stuff.
Exactly. So, and you also know that tomorrow there will be another tweet. So
a tweet. Yeah. Listen, we're seeing, like we've talked about, the price action's been good, but the headline risk was always the issue. And now we're seeing the headline risk kind of play out here, combined with some fundamental risk. Now, the backdrop, Ivan, is rates. So let's just remember the backdrop that we're in.
Exactly. Rates around the world are still very low and going lower.
Probably going lower, Ivan, and don't fight the Fed type things. First rate cut since 2008. That's something. There's a saying, don't fight the Fed, which I think is kind of is a truism, but we've never had a Fed that got bullied like it has in the last few months. So I think people need to understand that don't fight the Fed means a lot, and I think there's going to be a lot of institutional money that gets put to work when the S&P yield is higher than the 10-year yield. So it's very hard for professionals not to allocate money to stocks that have to put money to work. But that as an individual shouldn't be your reason. There's that saying, don't fight the Fed, but that doesn't mean you have to play the game. No one's forcing you to play that game. It's just one of those sayings that happens in the markets. And I do think if you look back historically when yields on the S&P, it's just hard to enter a bear market. Doesn't mean that we can't go inverted quickly. It's hard to go into a bear market when S&P yields are better than the 10-year. So keep that in mind if you're panicked a little bit, that money should step into this market at some point. But at the same time, seasonally, we're weak. Elsewhere, without retail, without banks, without semiconductors, and those were all looking really good. Walmart was looking fantastic 2 weeks ago, Ivan, if you take a look at it. I think money was starting to roll into that to play catch up to Amazon, and then poof. And combined with the tragic shooting at the store, combined with we're going to just see a lot of press about ammunition at Walmart. And the stock could easily be dipped down in mid hundreds, to 100.
Yeah.
And so you gotta just know your field position this week. Next up is IPOs, Ivan. If you look at the IPO index, also supply seemed like we were eating through supply there and all those big IPOs, and then boom, last week, Uber kind of closed at weekly lows. And so not horrible, just not good. Next would be, Slack IPO just closed. It's just gone straight down since its work. I mean, that's gone straight down from its direct listing at around 38. So down 25%.
So at some point it might be...
No real institutional support because I did a direct listing. So this could get messy this week. That's one at like the low 20s that I would probably take a look at if we get some dislocation.
Yeah.
So let's talk about what could work, and it's more of the same. Let's take your Momentum 50 list.
Look. Currently, the market is in a risk-off mode. So just because, I'll show you a few stocks that are showing relative strength. That doesn't mean that you should be owning them right now. If this market continues to deteriorate, like all stocks are gonna, get hit in some way, some more than the others. So.
Yeah.
But look at Twitter. It closed near 52-week highs last week, despite of the overall market weakness. And
their earnings. Let's take a look at Twitter and Snap here. They're niche social networks. I know everybody thinks they're huge, but they're niche in the scope of what Tencent and Facebook, Instagram. And so I think what's interesting here is that niche is in right now, or Twitter is the best product of all the social networks. It's tiring for people that just can't stand, curating their own feed. But as a real-time platform, I think it's benefiting in this newsy tape. And I don't have a position. I kind of got shaken out stupidly. Not stupidly. I just follow some, back there in the 34th last month when it gave up its gains. I think the stock, in a half decent market, is going to continue to do well. I don't think it has explosive growth potential, but it's the strongest of the niche social networks. And so that looks interesting. What else, Ivan?
Chipotle, they're consolidating near all-time highs. They're not really that dependent on China. Also quite a few biotechs that are not dependent on the trade deals.
But those are risk-on stocks, meaning
exactly, yeah. So you need to be careful, but they're.
Go to the Momentum 50 list to see what's standing out at the top. We won't scroll all the way down. This is
Twitter, Alteryx, Okta, Chipotle. Then we have some solar stocks.
So take a look at the solar stocks. Interesting.
Yes, absolutely. The solar sector ETF 10 is the best performing ETF, non-leverage ETF year to date, which should tell you something.
Take a monthly at that, Ivan. I just have a feeling, though, when those things are rocking, we're at a market top, not a market bottom. I feel like I don't think people can get rich off trading solar or owning solar stocks. They've just been one of those industries. The big ones that I've owned before are First Solar, which definitely looks interesting at all-time highs, or right around all-time highs. But,
no, it's not near all-time highs, but multi-year highs.
Yearly highs. Yeah, I don't get it. And then SEDG, which is a chip company for solar, is an Israeli company, which I follow. It's probably the strongest, but it's more of a straight technology company.
But this one is the strongest this year. Look at this one. So look at those two big earnings reports. First one here, earnings gap. It never looked back. And then last week, another earnings gap. So it basically tripled after two earnings reports. That's why it's so important to pay attention to strong earnings report. Look at this earnings growth, 1,000%, sales growth 43%, and last quarter the same.
Marcus Smith is great that you can follow that on this our show sponsor, but yeah, they break it out that way. They still have the old school coolest data-filled charts in my books, for sure. It's the one charting platform that kind of you can scan through this stuff. Have any of these, so SolarEdge showed up in our momentum list. Has this showed up in our list at all, end phase, or is it too small?
This one, no, but I wonder why. So I think we only have SEDG.
Chegg is another interesting one. Disney reports this week, which I'm bullish on them long. But Chegg looks interesting too.
Yeah, absolutely.
Massive run, great CEO, great business. It's the e-textbook. It's the winning e-text platform. I think it's the one way for kids to keep costs down at the impossibly rising cost of education. Earnings have just been incredible the last 5-6 years.
Yeah.
Stock went from $5 to $40. Very niche, but an incredible company. Kind of had big earnings here, Ivan, and then just pulled back with the market.
Exactly, like big earnings breakout. Look at that acceleration, 92% earnings growth. Sales growth is very hefty as well. So big earnings breakout to new all-time highs. I'm not sure what their short interest is.
In the platform because
wow, huge short interest. 12.6 days to cover. This is huge. So
big number.
Yeah, I mean a lot of short sellers for sure.
I wonder why they're attracted to it.
I don't know. It could be valuation, and that's usually the most.
Yeah, but the valuation isn't crazy.
The biggest reason.
40 times next year's numbers, 50 times next year's numbers for a leading growth company. And the market cap on this is $5 billion?
5 billion, yeah.
Tiny company still. Interesting.
So they could be squeezed in a better market.
Okay. Anything else that stands out on your end?
Not really. If you're a swing trader, just do less. Right now, the market will be very volatile, and I'm kind of having the feeling that the next couple months will be very volatile. So and then chasing breakouts not really gonna work. It's better to focus on range bound setups. Just found stocks that are holding in a range and just try to buy them near the lows of the range and sell them near the highs.
Yeah, for me as trends, I'm definitely looking. With 2% interest rates, I think the market's just crater here. But at the same time, I have my positions on. I think what worries me, I'll end with this, is the FANG stocks. They just have not. I mean, law of large numbers aside. I don't like the bank action, but at low interest rate, with rates dropping, that's not great for the banks. But at the same time, Ivan, the FANG stocks, like I think none of them could hit highs on this rally this summer. And in fact, they've all had ugly reversals since earnings. So you can see Apple there first, Amazon been ugly since they reported. Facebook kind of almost looked like it was gapping up. Netflix imploded 15% on earnings, and then Facebook kind of did a reversal at the gap. I think those four signs. And if you follow me, I was selling all four of them on their numbers, including Google. Google was the only one to really gap up and still hold its gap, but it had also been the weakest. So I think if you look at the FANG stocks, money is flowing out of the large caps because that's where the money, is easy to get out. They're liquid. And so if that kind of spills over here, you could see a nasty month or two. But I think underneath it all, with 2% interest rates and dropping, and a GOP that's hell-bent on keeping this market up, those are not reasons, by the way, to go on leverage and blow yourself up. But I think, panicking at this point it would be silly. But at the same time, this is in a market that increases in volatility. You have to know what you own, and you should do less, and you should put yourself in a position to take advantage of some potential bargains in a high volatility market. We're shooting for positioning ourselves for periods of low volatility where stocks trend. Right now, trends are starting to get kind of upset. And what we had, Ivan, was we were having divergences. We weren't having a lot of stocks hit new highs. There wasn't a lot to choose from.
I mean, up until last week, everything was looking incredible. I mean, there were some momentum divergences, but for the most part, the market looked really healthy.
Price-wise, things look good until last week. Pretty amazing. But the four leaders all reversing.
Definitely a major cautionary sign.
And then the banks.
The banks, also the momentum stocks, typically the momentum leaders. So how do we usually pullbacks in bull markets are buying opportunities, but sometimes those pullbacks turn into nasty corrections. And one of the signs that we need to watch for is the price action in momentum stocks. If we see momentum stocks like we did in May, when they just went kind of sideways and built new bases, that's a sign that the market pullback is a good buying opportunity. But if we see them deteriorating and just crashing below their 50-day, even below their 200-day moving average, that's the kind of sign that you need to either hedge or just raise cash and just do less in general.
Yeah, I'm looking at the IPOs that are breaking. I'm looking at Walmart. I'm looking for signs of firmness in those, because those are where a lot of fresh money can get out and is looking to get out, or if it firms up, that would be a good sign. But Walmart, after breaking all-time highs and then on these tariff wars and on, I think it's a key stock to keep an eye on. And to be honest, until it tested 104, 105, it doesn't even interest me. So, I think if Walmart gaps down in that 104.5 area, there may be a trade. But from a trend following perspective, I'm just going to wait and see for strength. I'm not looking to buy weakness right now. Okay, have a great week, Ivan.
You too, Howard.